Well, good morning. I'm Jagendra Rana, and topic of the day is rural expansion for growth in 2025. Rural expansion for growth in 2025. The Indian insurance industry is set to focus on customer-centric technological adoption and expanding into rural areas to drive growth in 2025. These initiatives are planned amid anticipation of policy level changes, including potential increases in foreign direct investments, amendment to insurance regulations, and revisions in goods and service taxes rates. So the much awaited launch of the Bima Sugam is also expected this year. Insurers will prioritize digital transformation by adopting cutting edge tools like generative AI and machine learning to enhance underwriting, claims processing, and customer engagement. Proactive support systems will replace reactive models, ensuring seamless customer interactions. So apart from technology, the industry insiders said the future growth of the sector will depend on the ability of insurers to penetrate the rural areas. To penetrate these geographies, insurance companies will need to build a simple, easy to understand, bite-sized products, sachets, and deliver them through physical outreach. So from a regulatory standpoint, on the back of open architecture for banks, individual agents too should be permitted to sell products of more than one insurer. The industry will also increasingly focus on strengthening distribution network and human capital as we deepen our presence in Bharat, Tier 2, Tier 3 cities and towns. We continue to invest in deepening our distribution presence through branches, people and technology assets. So at the policy level, the insurers are awaiting changes raising FDI to 100% in the sector. The introduction of a composite license exemption of GST on life and health insurance products along with the progress in the insurance regulators flagship Bima Sugam and other accounting reforms. So the insurance regulator plans to launch Bima Sugam by April 2025 and introduce the International Financial Reporting Standards accounting norms for Indian insurers by the end of FY 2025. So meanwhile, the tenure of the current IRDA chairman will end in March 2025. The life insurance industry has seen a series of regulatory interventions on the product and distribution front in the last year. Some more changes are already mooted and expected to unravel during this year. These past and impending changes have materially altered the operating model of the companies. The Insurance Amendment Act will truly set the tone for the future. Provisions like a composite license may potentially lead to a major changes or major shake-up in the sector. Even as insurers await regulatory changes, adapting to frequent changes and maintaining compliance are costly and time-consuming. Lack of talent, rising fraud and cyber threats are also concerning. Fraudulent claims and data breaches are increasing with digitalization and cyber attacks on sensitive customer data can erode trust. So insurers need to implement machine audits, machine learning algorithms to identify suspicious patterns in claims, invest in advanced encryption, regular audits, and employees maintaining or employees training on data protection and educate customers on cybersecurity best practices. So the Indian insurance industry is set to focus on customer-centric technology adoption and expansion into rural areas to drive growth in 2025. These initiatives are planned amid anticipation of policy level changes, including potential increase in foreign direct investment, amendment to insurance regulations, and revisions in goods and service taxes rates. So the much awaited launch of the Bima Sugam is also expected this year. Insurers will prioritize digital transformation by adopting cutting-edge tools like generative AI and machine learning to enhance underwriting, claim processing, and customer engagement. Proactive support system will replace a reactive models, ensuring seamless customer interaction. So apart from technology, the industry insiders feel the future growth of the sector will depend on the ability of insurers to penetrate the rural areas. So to penetrate these geographies, insurance companies will need to build a simple, easy to understand, bite-sized products, sachets, and deliver them through digital outreach. So at the policy level, the insurers are awaiting changes. Rising cost of healthcare services demand from micro-insurance segment and post-COVID awareness is pushing sales of health insurance policies in semi-urban and rural markets. So the insurance has doubled its rural policies from 13% in FY 20 to 32% through the demand of the health insurance. During the same period, the number of lives covered also rose from 11 to 25%. There is an increase in the rural business now because the insurance penetration will definitely have to increase in the rural areas. Insurance penetration ratio has a long way to go because the government programs like the Jan Dhan Yojana and Jan Suraksha have bolstered women's participation in financial services. But the benefits of government schemes are yet to reach a large section of the women population. So a recent report by Women's World Banking, a global non-profit organization dedicated to women's economic empowerment, was a mixed bag on this. The role of the savings accounts as an entry point for inclusion is there in rural areas. The importance of women agents and the challenges of persistence and claim processes in insurance adoption is necessary. So the vulnerability to resilience found that Jan Suraksha micro-insurance products are success among rural segment, particularly women. Towards financial inclusion, the first entry point is invariably a saving bank account. It leads to you creating a digital financial footprint and makes you eligible for other products like credit, etc., which that segment really requires. So another resilience product is insurance. So the biggest myth we had to bust was that women are risk averse. No, they are not. They are actually very risk aware because they are the providers and the caretakers of the family. So what are the kind of products that actually protect her livelihood and protect her income, especially since it was also coming right off COVID. And so we saw very quick take up when it came to women and the fact that the women agents were also speaking to whom they would trust, and the product being easy, and it was easy to enroll. So when we began implementing these interventions with various banks, we observed adoption rates increases by 3 to 5 times. So for adoption to happen, the product has to be appropriate, affordable, and simple to understand. Insurance is notoriously complex. Insurance is notoriously complex. Having been in the insurance business maybe for 15 or 20 years, people can say that is the toughest. So this is the time to make it simple for customers to understand. These are all critical factors that have driven the adoption of insurance. In insurance, you will find that the claim ratio is fairly low and depends on the product categories. So this is a reflection of the overall insurance business, not just of this segment. This segment means health insurance. So one is in terms of the claim ratio, and the second one is in terms of the rejection ratio. So like that whole piece is something that even educated people don't know. So leave alone the people and the women in the low middle income segments. Awareness is a process, and the third piece, of course, is the actual process of settlement. So the extensive documentation that is required for you to claim and things like that, which makes it difficult. Women will boost insurance penetration among the bottom of the pyramid population groups, and the women is doing efforts. So the penetration ratio in this country has a long way to go. And when you talk about penetration, there are many things like penetration in which segment of the population, in which segment of the population. So if you see the penetration in the absolute bottom of the pyramid, it is actually pretty decent. You should not look at it as a whole, but look at penetration in the segment of the population. It is the missing middle. It is the missing middle, which is estimated to be around 500 million or so. So that does not have cover, and even if they have cover, it is highly inadequate. So products that are appropriate for the segment have been missing for a while. Distribution segment has been missing for a while, which is why this insurance for all is going to be very interesting, because the regulator is challenging the industry to come up with a product distribution channel platform. So insurance can be a complex product, especially for customers with low financial literacy. And in the rural areas, the financial literacy is extremely low. So it is never about the enrollment, it is about the persistence. How do you ensure that my cover continues? The success of the product and the policy comes when you actually continue paying the premiums year after year. In this regard, the government has done something very clever. It's automatic renewal. If I have money in the bank, it gets automatically debited. I don't need anything else from you, unlike the private sector, etc. So where I need to actively remember and ensure that the payment is made, and one can forget such things. But in the government scheme, as long as money in the bank account, it actually gets debited. So digital financial inclusion has been a major focus of the government. Yet significant challenges remain, particularly due to India's caste-dominant economy. With 81% of the employed population working in the informal sector, as per ILO data, maintaining a stable bank balance for insurance payments can be challenging for individuals from the unorganized sector and gig economy. So how can these groups, especially women from these groups, be better integrated into the formal financial and insurance ecosystem? In women's world, banking we believe is not just financial literacy. We actually believe in something called digital financial capability. Basically, it is about not just having access but a real agency. So, in the case of a fierce conservative, she will not come on to the platform, come what may. She is absolutely terrified. It is very important to understand that they are not a homogeneous mass. They are not a homogeneous mass. You need to have very different approaches, different solutions for each of these women. Given the current challenges in financial inclusion, digital adoption, and the dominance of the informal sector, do you think the goal of achieving insurance for all by 2047 is realistically achievable? This is not an impossible task. $55 crore accounts could be opened in 7 years. The answer is no, but we did it. And so, this is possible to enter into the rural segments also. Thank you very much.